Hello, fellow realists. I'm David Ravel, and this is ValueSide for Tuesday, April 26. For all of our articles and podcasts, visit valueside.com. Well, today, can big tech take up the mantle? Well, over the next 3 days, we will get the earnings reports from the heart and soul of this stock market. Today, both Alphabet, Google, the world's largest search engine, and Microsoft, perhaps the world's largest software company, will reveal their latest results, followed tomorrow by Facebook, and then online retailer Amazon and computer maker Apple following on Thursday. Now, perhaps it's only fitting then that Elon Musk announced his takeover of yet another one of these technology companies, Twitter, in a deal estimated to be worth $44 billion yesterday. Just how much money are these tech giants worth anyway? Well, let me put it this way. If you add up the market capitalization of the top 5 tech companies, Apple, Amazon, Alphabet, Google, Microsoft, and Facebook, you get, depending on just how the stock market closed that day, nearly $9 trillion in total value. And assuming that you'd like to purchase all those 5 companies, it would take the total income of every man, woman, and child in the U.S. working for nearly half a year to save enough to make that purchase. It's an incredible concentration of wealth, and I might add power, in the corporate offices of just a relatively few. As a group, the tech stocks have been as upbeat and positive as you could get over the last decade. Take a look at the 10-year chart for both the companies reporting today, Alphabet and Microsoft. It's as if you drew a line from the lower left-hand corner to the upper right-hand corner of the page. It's been up, up, and away, pluses everywhere, except for this month. This April has seen a marked drop for both, as the market as a whole has suffered in April. This afternoon, we'll see if there are some fundamental reasons behind this drop. Now, much of Wall Street seems to think there's more to this swoon than just a momentary case of the jitters. On Thursday, we will see the first release for the GDP for the first quarter. And you can forget that 6.9% growth we saw last quarter of 2021. The Street officially is looking for a GDP growth rate of just 2%. And most estimates lately say, make that 1% GDP growth. Or in other words, we're slipping into near recession numbers. And if there's one thing that's for sure, the tech companies are not going to be immune if we're having that kind of a slowdown. Today, analysts are mixed in their reviews of these two companies. For Alphabet Google, the Street is looking for earnings per share to drop about 2.5%, while for Microsoft, they're looking for a nearly 10% improvement in their earnings. We'll just have to wait until this afternoon to see how close the Street is with these estimates. But I suppose the real importance for the next couple of days will be to see if these tech giants can once again take up the mantle and lead this economy to higher ground. There's a lot of trepidation right now, both on Wall Street and on Main Street. Concerns about the safety of our country in a time of war. Concerns about the health of our loved ones in a time of a pandemic. Concerns about food in light of shortage. And concerns about money in times of extreme inflation. Now, we've all seen the opinion polls, which show that a growing majority of Americans believe that the country is not headed in the right direction. By Thursday evening, we'll be able to see if investors have one more thing to worry about in that growing list of concerns. In overnight economic news, South Korea reports that their first quarter GDP came in at just over 3%, in what I believe may be one of the best performances this quarter. The U.S. will announce their GDP growth rate on Thursday, and it's expected to be only a little over 1% in growth. You might even note that analysts have been lowering that estimate over the last couple of days. Coming up shortly will be the latest on durable goods. This is another one of those indicators that's caught up in the supply chain issue. The Street expects durable goods to be up about a percentage point this morning, but don't be surprised if it comes in a little lower than that, simply because the goods aren't available. And then in a couple of hours, we'll see the latest in new home sales. This March report is expected to be just slightly lower than January. In earnings, of course, the big news will come later this afternoon with those results from Microsoft and Alphabet. In the meantime, we've had positive results from PepsiCo, healthcare company Novartis, and defense contractor Raytheon. And that's the value side for this Tuesday, April 26. For all of our podcasts and blog posts, visit valueside.com. I'm David Ravel. ValueSide is independently written and researched. The views expressed are strictly my own.